Welcome to the Deep Dive, where we take your source material and really extract the knowledge you need to be well informed.
And today, we are going deep.
We really are. We're diving into the engine room of the digital world, Broadcom Inc. We've got their Q4 and fiscal year 2025 financial report right here from December 2025.
And our mission today is pretty straightforward. We want to give you the shortcut to understanding a truly crucial player in global tech.
A behemoth, really.
Exactly, a behemoth. We're going to unpack how they hit nearly $64 billion in revenue this year. We'll dissect their two main engines, semiconductors and infrastructure software.
And the big one, the AI story.
Oh, yeah. We have to analyze just the sheer velocity of AI-driven growth that's happening right at the heart of their business.
Okay, let's just jump in with the headline numbers right away because, they really are staggering.
They are.
Broadcom closed fiscal year 2025 with net revenue of $63.87 billion. That's a 24% increase year over year.
A 24% jump at that scale it's massive.
And then you zoom into just the last quarter, Q4, and revenue hit $18.015 billion. That's a 28% jump from the same quarter last year.
And when you see that kind of accelerated growth, especially at this scale, it tells you something really important. The company isn't just reacting to the market.
They're driving it.
They're driving it. They position themselves as an innovation powerhouse, and you can see it in their IP portfolio. They have something like 19,000 patents.
And they put their money where their mouth is, the R&D spend.
$11 billion. Just in FY25. That's not just tinkering. That R&D is the fuel for everything we rely on every second.
$11 billion. That's an investment in staying number one. Okay, but let's zoom in on the health of the company beyond just that top-line revenue. The profitability for FY25 looks incredibly strong.
Oh, they absolutely are. If we look at adjusted EBITDA, that's earnings before interest, taxes, depreciation, and amortization.
The key metric for core profitability.
Right. And Broadcom's hit a record $43 billion for the year. That's up 35% year over year.
$43 billion. So what does a percentage increase like that actually tell us about where they sit in the market?
It tells us two things. One, they're incredibly efficient. But two, and this is probably more important, it suggests they have tremendous pricing power, a real structural advantage.
How so?
Their non-GAAP gross margin climbed to 78.6%. So when you can keep your margins near 80% while your volume is exploding, it means your products are essential.
And nobody else can make them quite like you can.
Exactly. They're highly defensible against price competition.
And that advantage lets them turn those profits directly into cash. Let's talk about the cash flow, because for an infrastructure company, that's everything.
It's the lifeblood, right? Their non-GAAP free cash flow was incredibly strong at $26.9 billion. That's a 39% increase from last year. And that kind of cash gives you extraordinary flexibility. You can fund that massive R&D budget, you can make strategic acquisitions, and you can return capital to shareholders all at the same time.
Okay, so speaking of numbers, we should probably address something for listeners who follow financial reports pretty closely. The difference between GAAP and non-GAAP.
Yes, that's a crucial distinction to make.
We saw it in their quarterly earnings.
We did. So if you look at Q4, the GAAP diluted EPS, that's the official accounting principles number, was $1.74.
But the non-GAAP number was higher.
It was $1.95. You can think of the non-GAAP figure as sort of management's view of the core ongoing business performance. They strip out one-time charges, things that don't reflect the day-to-day.
Like amortization from a huge acquisition or things like that.
Exactly. So it's management saying, look, this is how profitable the actual business is without the accounting noise. Gives you a cleaner picture.
And you see that confidence reflected in their guidance for the next quarter.
Oh, absolutely. The forecast for Q1 of FY26 is highly ambitious. They're expecting revenue to hit around $19.1 billion, and they're maintaining that premium profitability. They're guiding for adjusted EBITDA to be around 67% of that revenue.
So they were not expecting a slowdown at all.
Not in the slightest.
And that confidence has to be tied to the most explosive part of their business right now, which is the Semiconductor Solutions Group. It's their largest segment, 58% of total revenue.
$36.8 billion.
Yeah.
And this is where the AI story really takes off.
The semiconductor segment is being, what, completely reshaped by AI.
It's the engine that's accelerating their entire company.
Explosive is the right word. In Q4, the revenue surge here was driven mainly by AI semiconductor revenue. It increased a stunning 74% year over year.
Right. But that's not even the big headline.
No, the truly jaw-dropping number is the projection for Q1 2026. They forecast that AI semiconductor revenue is expected to double.
Year over year. To $8.2 billion. We have to just pause on that for a second. Doubling revenue in a segment this large in a single quarter. It suggests an almost insatiable demand from the biggest tech players, the hyperscalers.
So what's driving that? What are these products?
It's largely fueled by two specialized product types, custom AI accelerators and high-performance Ethernet AI switches.
Okay, can you break that down for us? What is an AI accelerator and why is their switch so important here?
Sure. Think of the AI accelerator as the like the bespoke brain and muscle that's designed specifically for training and running these huge AI models.
So it's not a general purpose chip.
No, not at all. Broadcom works with partners to design custom chips that are perfectly optimized for one specific job. That means way better performance and lower power use, which is critical at that scale.
Got it. So that's the brain. What about the switches?
The switches are the nervous system connecting thousands of those brains. In a normal data center, connectivity is fast. In an AI data center, you need this unprecedented, lossless, high-speed communication between every single accelerator.
So they can all work together like one giant computer.
Exactly. Broadcom's Ethernet switches and their optical interconnects are the specialized plumbing that makes that happen.
So they're providing both the supercharged engine and the superfast highway system for this whole AI data center world. But the semiconductor group is bigger than just AI, right?
Oh, absolutely. The AI growth is the headline, but the base business is still essential. They cover all high-performance networking, switching, routing, all of that. That's the foundation for global data movement, not just for the hyperscalers, but for big service providers and enterprise customers too.
And inside the data centers themselves, on the server and storage side.
That's their server and storage connectivity business. They make those essential internal parts, things like RAID adapters, which protect your data across multiple drives. They also make the controller chips for SSDs and a key component called the fiber channel HBA.
And what does that do?
It's the high-speed link that lets servers talk to big centralized storage systems. It's mission critical for places like banks and cloud providers where you absolutely cannot lose data.
So it really sounds like they build the backbone that lets data flow quickly and reliably everywhere. Okay, let's move out of the data center and into the world we all interact with. Broadband.
Right, this is the part that touches every home. Broadcom provides the end-to-end solutions for getting fast internet to you. Components for PON, for cable modems, for DSL, and of course the chips that power high-performance Wi-Fi routers.
So if you just upgraded to a new Wi-Fi 7 router,
There's a very good chance Broadcom technology is making that speed possible.
and that connectivity goes right into our pockets with their wireless components.
Correct. They're a key player there. They supply the RF front-end modules that manage all the complex radio signals in a modern smartphone, plus Wi-Fi and Bluetooth combo chips.
And finally, the industrial sector. This is where the physical world meets their tech.
Yeah, and this is a really vital long-term business. They provide components for things like factory automation, renewable energy grids, and increasingly complex automotive electronics.
So sensors, motion controls.
All of it. The things that make sure robots move precisely and that our energy systems operate reliably. It gives them a really nice, stable business far away from the consumer electronics cycle.
Okay, that gives us a great look at the hardware side, the 58% engine just roaring with AI fuel. Now let's shift gears to the second engine, the infrastructure software group.
Right, and this brings in the other 42% of revenue,
Ooh.
$27 billion.
And it provides a lot of stability and diversity.
It really does. This segment is the ballast for the whole company. While the semiconductor side can be, cyclical and explosive, the software side provides this really robust, highly predictable revenue. And it saw strong growth, too, up 26% year over year.
And we're not talking about consumer apps here. This is deep, embedded corporate IT. What are the main areas?
They organize it into 4 deeply entrenched areas. First is private cloud. This is about helping massive companies run their own IT infrastructure.
Not the public cloud like AWS or Google.
No, this is for companies who want to run their own. It includes solutions for cloud infrastructure, application security, and very importantly, disaster and ransomware recovery. They're the guardians of corporate data.
And they still have a huge presence in a system that, frankly, still runs the global economy. Mainframes.
Absolutely. Their mainframe software is foundational. So many banking, insurance, and huge retail systems still run on these things because they are just unmatched for reliability.
It's fascinating, isn't it, that in this era of AI acceleration, the mainframe is still so critical.
It really is. And Broadcom provides the tools to modernize them. DevOps tools, cybersecurity, and even AI ops to automate how these critical systems are maintained.
So what about security across the rest of the business?
Security is a major pillar for them, especially after acquisitions like Symantec. Their cybersecurity portfolio offers scalable protection, detection, and response across the whole enterprise.
So that's everything from protecting your device to protecting the whole network.
Exactly. Identity management, payment security, endpoint, network, the whole stack.
And finally, enterprise software.
Yes, this group is focused on digital transformation tools. They help companies modernize their old processes with things like API management, which lets different software systems talk to each other, and AI ops and observability, which gives companies a clear view into how their systems are actually performing.
That portfolio complexity, it really stems from their history, doesn't it? We talked about their strategy of growth through acquisition. They have something like 24 category-leading divisions now.
That acquisition history is everything. They didn't just buy technology, they bought huge, entrenched customer bases that rely on this mission-critical stuff. And that integration strategy is why they can generate such massive cash flow.
And that cash flow, as we established, translates directly into shareholder value. Let's focus on that for a minute. What did the report say about dividends?
The consistency here is remarkable. The board just approved another quarterly dividend increase, 10% up to 65 cents per share.
A 10% increase is an aggressive, very clear signal.
It's a huge signal. It says they are completely confident that the cash generation, that $27 billion in free cash flow, is sustainable. And for context, this is the 15th consecutive year they've increased their annual dividend.
Since 2011.
Since 2011. It's the hallmark of a mature, profitable infrastructure company. They're not just reinvesting everything, they're also focused on returns.
And they still have a massive war chest on hand. They ended the year with, what, $16 billion in cash?
$16.178 billion. It's a critical buffer. It just paints this picture of a company that is simultaneously driving explosive AI growth while managing a super stable, profitable software business. It's a very specific and very effective strategy.
So what does this all boil down to for you, the listener? I think the core insight here is that Broadcom isn't just a component maker. They are actively structuring the backbone of the digital economy. You have this massive, stable software business, and layered on top of that is this explosive AI-fueled semiconductor business that is, expecting to double its core revenue next quarter. They're capitalizing on the single most important tech trend of our time.
And maybe the final thought, the provocative thought to leave you with, is to try and connect all these invisible pieces back to how you experience the world every day.
Right.
We talked about things like optical interconnects and fiber channel HBAs and AI ops on mainframes. You never see these things.
Yeah.
But they are the foundational tech that makes everything work, from your instant bank transfer being secure to your 8K video stream not buffering. The plumbing. And given that AI demand is now stressing the limits of our physical infrastructure, data centers are consuming unprecedented amounts of power and connectivity. Just consider how reliant the entire global system is on the specialized components supplied by just a handful of providers like this. And think about what the long-term implications are if that core infrastructure gets strained.
Something for you to mull over the next time you access a cloud application or stream a movie without a single stutter. That wraps up our deep dive into Broadcom Inc. Thank you for joining us.